If you're earning at least £250,000 worth of profit, you're getting stung £177,000 worth of tax without proper tax planning. With tax planning, if you watch this video, believe it or not, we get it down to 4.4k. Hi, I'm Z, a chartered accountant and a tax advisor. We help a lot of entrepreneurs on this journey. Just to put context, the problem that I've got to solve. What I'm trying to do is reduce your taxation, which we are showing here. Also try to keep your personal income above 100k in case you want a mortgage. Just to put context into this fund, what does this do? If I do percentages, and everyone knows we love percentages, this is about 71% that you're paying out. This is, believe it or not, 2%. Without tax planning, with tax planning. This is what the value you're going to do. Now we're going to go through all this fun. I hope you enjoy it. Get a bit of cup of coffee, get ready for this, and try to make these notes, because this is going to be your best Christmas or New Year's present that you're ever going to have. So in the first scenario, first thing we would do, I'm putting it here, is get the missus involved. If it's a husband, or vice versa, get the husband involved in the business. Assuming they've got no other income, you would get the wife onto owner of shares and become a director. So now you've got two shareholders. Apologies on the writing. That's a terrible age. Right, shareholders, right? And directors. That's the first move you do right at the beginning. Always get advice to do this, because now we've halved the problem, and now you're going to see how I make those numbers stack up. First thing we're going to do is explain how did I end up without or basic tax planning get 177,000 worth of headache. What I did was I had a limited company. This is what a lot of people do. It made profits of £250,000. Hope you can, are you following me? It's £250,000 profit. That's a pound note just if you're watching. Right, 25% tax rate. That's a corporation tax rate. You lose 62,500 straight away from that. What does that leave? That's what you got left after corporation tax. Then the normal way is we pay out by dividends. And dividends, believe it or not, in this case, because the personal tax and took all the money out, personal tax would be on 187,500 paid by dividends. Believe it or not, that works out at £57,348. Oh my days. There's even some pennies there as well. Right, so what ends up being left after all that fun, £119,848.41. But if you remember, I said it's 177k worth of paying. What happens is when you have tax more than £1,000, what you end up having is what we call payment on account. And what the government asks you to do over January, July, if you've seen it, is pay another 100%. So you end up paying another £57,348.41 as a deposit against the following year's worth of tax, which is quite painful. Hence, it gets down to £72,803. If I get my maths right, 18 pence, which is, when you add all these taxes up, it gives you the number that I was saying at the beginning, the 177k, which you end up losing in tax. So that's the pain at the beginning. And I hope you guys are understanding that is what's happening if you just leave it and you don't get advice and you don't structure and do all the things which we're going to talk about. Now, can I do some fun? Let's see. The first step was, as I said, we added a shareholder and director on. That sort of changes stuff, and we're going to go through all this fun. First problem, the £62,500 corporation tax, right? And then we got the problem with the 57,000 times 2 personal tax. I hope this is making sense. This is how we got to the number. What we're going to do now, we're going to have the same scenario and see what we can do to get rid of this bad boy tax, or bad girl, depending who you want to speak to. Initially, as you saw before, we had a bit of fun because there was no planning at all done. Now with planning, first step, as I said, add the first show. Second step, in our scenario, we've got good old John and Jane. John's come to us, he's heard from Imran down the road. It is his tax advisor, accountant who can actually help him, and he's turned up, and now we're doing the planning. right? So I'm going to have John and Jane on this fun. So John over here and Jane over here. Okay, second step. First step, added Jane on, shareholder director. Second step, what we're going to do is we're going to put a salary through at the tax efficient amount in this scenario. Always get advice what that is, because it does vary, and it's going to change again as budgets and tax changes. Right now, we're two people, 12,570 each. The £250,000 profit, I'm going to do the write-offs over here. If my maths is right, and we've got the totals running down here, we're going to have £25,140 we've just knocked off. Okay, we'll do corporation tax first and then personal tax after this. Third aspect is home office. This is an agreement between you and the company, limited company, to offset some of your costs that you incur to have an office at home. Because you've got husband and wife, you can have two, right? In this case, we're using the annual charges. This is like £2,500 each. In this case, we could offset these costs. So that's why we've set it at £2,500 each. Always get an evaluation and advice on this from an appropriate accountant tax advisor who understands this. This is 5,000. So if I do my totals, we had 250, we've had 25 plus 5, about 30k is disappeared. Now we're going to do a big one. The accountant tax advisor doing this now understands pensions, and I would say always look into SAS pensions. We've got some important, good, valuable information on there, an episode I done on Sky, and a lot about SAS pensions, but so powerful. Director contributions, hence why it had to be a director. You can put 60,000 in each. Always get advice on this before you do. These are just for pure illustration perspective, and there is certain rules and criteria that you've got to meet with every adjustment I'm talking about here. That's 120,000. Can you believe this? All right, what are we on now? I think about 100k if my maths is doing me right. The next bit, this is magic happening. I hope you understand that, right? Number 5, people talk about this, but many people don't really always understand what this means, but you can actually charge interest on the money that you've lent the limited company. You have to set up certain aspects. We call it a loan interest agreement. And believe it or not, in this case, John and Jane have lent the company money, and it works out 6,000 each, which they're charging. There's a reason for these numbers. When we go through the personal tax, you'll understand what I'm talking about. That's 12,000 over here, another 12,000 saving. Oh, right. In my maths, got about 88. I'm sure the team will correct me. Right, the other bit that's often missed out, and I'm just going to go through some of this, is mileage. They've been traveling to their clients, doing loads of number of aspects for a business, to run a business. It's a lot of work. They don't claim the mileage, but they have now. And it was about 10k mileage. So if there's 10,000 each, that can be up to 4,500, because the first 10,000 you get 45p per mile each. That's 9,000. Hope I leave room on the whiteboard. The hits just keep on coming. Mobile phones. I see this so many times. You have to put the company in the mobile phone and have it in the name, and therefore you can have one each on the company, and this can cover all your calls, and it's tax deductible without the dreaded benefit in kind. I'm using the ex-VAT price. I'm just saying that it's normally about £35 per month ex-VAT. It may be more. So if I do my maths right, that's about £420 each. And that is, because VAT will be dealt with differently, £420. And now I'm getting to £840 deduction there. We've not finished. We've got some big ones coming up. And this one is a massive one, requires some specialist knowledge, but I'm going to show you on this. For the business, we needed an office where customers, clients come. We bought a commercial property. We used some advanced tax planning and knowledge. We bought it in an LLP, and we are charging our limited company rent to use the commercial property, right? So LLP rent, and what it is, it's about £5,000 a month in total. And how LLPs work, and if you get good advice, and we'll get onto it later, you could do it in a certain way where you pay no tax based on your circumstances. Always get advice. But let's say this is worked out, so that's like 25k each, or 30k each, I should say, because it's 2,500 or 5,000 in general. So you've got 60,000. Ultimately, it ends up in both of the partners because the husband and wife also run the LLP. That is 60,000. We have one more. I'm going to just put this in anyway. And there is a lot more, but I'm just giving an example of this. Something called trivial benefits. Trivial benefits and the annual exemption is something that many people forget, and I would always try to utilize that. Trivial benefits and the annual exemption, that is about £450 each worth of fun, and that can be £900. The annual exemption often used for Christmas party, birthday party, doesn't really matter. Right, how much is my profit after all of that? I'm going to do it in my head quickly. We've got £250,000 profit. Our first move was to put the shareholders and directors, split it between husband and wife, and I've documented the moves. The second move is the salary, which is a £25,000 deduction, roughly. Number 3 is a home office license agreement deduction. Number 4 is a director contribution to pensions. Let me get that number right, which is 60 grand each, is 120,000. Deduction. Loan interest, this is a loan interest between you, director loan interest, I'm going to call it. Oh, it doesn't matter, you can call it loan interest. 6,000 each, which is 12,000. Then I've got mileage, which is 4.5, which is 9,000. Then I've got the mobile phone cost, which is 840. Then I've got the LLP rent, which works out about 30,000 each, which is 60,000. And then the last one, I've got trivial benefits of 450, which equals 900. If I put the total down, after all these deductions, we've got down to £17,120 profit. So our tax, corporation tax, actually drops from 25% down to 19% because it's below 50,000 and they've only got one limited company, which is 71,220%, or 19% is £3,252.80. What a result. That is the corporation tax part and how you mitigate corporation tax. The next step will be personal tax. This is for corporation tax planning, just everyone understand this part. And you should do this with your account tax as early as possible during the year. So I'm going to do a recap what it was. We had a limited company profits of £250,000. First step we added additional shareholder to make it 2, and a director, the wife or the husband, in this case John and Jane, because they told Imran, their good friend, said, come and see us here at GoldHouse or wherever you're going. People who've got the skill sets to deliver. Then the second step we put a salary in for both of them, 12,570, which gave 25,140 deduction, reduced the profits down. Then we did a home office agreement. I'm going to write that down here because it has to be an agreement. That saved 2,500 each, which is 5,000, and we'll go through it on the personal tax sheet planning later. Then, because they're both directors and we set up a SAS pension specifically for them, we were allowed to do a £60,000 each expense contribution, which is £120,000 saving. Excellent. We're adding on the wealth journey, another part of the process that we go with entrepreneurs by giving them multiple sources of income. The next bit was loan interest. This is money they've lent to the company as directors. If you structure it correctly, you can get a big benefit for that. They were charging £6,000 interest each, which is a £12,000 deduction. Then we got down to they'd done mileage for the company. People weren't capturing this. There is a process to do that. With all these things, must get good accountancy tax advice. We did mileage log. They did about 10,000 miles each, going to see clients and other aspects for their business. That was £4,500 each, which gave them £9,000 deduction. Then we've got mobile phone costs. Everyone needs a mobile phone these days, right? Provided it's in the company name, it meets the criteria. You can put average £35 a month, normally it is 420, can be more, but in this case that's what theirs was. £840 for John and Jane deduction. Now we're going up a few scales here. They needed an office. They went and bought an office. We give them advice to set it up in an LLP, limited liability partnership. There's special reasons for that. And in this case, it allowed them to charge rent to the limited company of 30,000 each, which is actually 60,000, about £5,000 a month, based on that commercial property, which is at market value. You do need to make sure you get all your ducks in a row when you're doing this kind of planning. Then they had something called trivial benefits. This is when you can give gifts or receive gifts as a director. It is limited, and they obviously wanted a Christmas party or a birthday party, annual exemption. So that ends up being a £450 each benefit that it can use, which is a £900 deduction. When you add all this fun up, your corporation tax profit goes from 250,000 down to 17,120, which is, as I did say earlier, corporation tax rate of 19% because it's below 50,000 profit, which is £3,252.80. How much was the corporation tax before? We didn't have it here, but I think we had it on the previous one. It was 62,500. So you've gone from 62,500 down to £3,252.80. And that's the part one of this process. So just to make sure everyone gets the view for this, this is the new tax. It was 62.5 if you see earlier in the video when we did the planning to show you how we got the 177, the corporation tax element was 62.5. Okay, next bit we're going to get onto is personal tax plan. I'm going to cheat a little bit because I've got John and Jane, and these are all the things we've done. So you can see how do we treat them for personal tax in this case. So what we're going to do here is, obviously, because we've got shareholder directors, before I do that, got to do a self-assessment for both. Okay, and what we got to do is then show and deal with all these adjustments that we've done, assuming this is everything that they are earning. So what I'm going to do now is get rid of this bit because this is not relevant anymore, and we're going to make this into a personal tax plan. And this personal tax plan is really important because you need both elements when you're doing this, both corporation tax and personal tax. Personal tax of that big 177k, personal tax was £114,696.62. Wow, that was a big number. And the reason why it was 114,000 was you pay, as I showed earlier, you pay 57,000 odd in personal tax, and then it doubles because of payment account. Because if it's more than £1,000, generally, based on your circumstances, you will then have to pay payment on account, which is double the amount, 50% in January, 50% in July. What can we do? We're basically going to deal with all those adjustments, because you'll be like, Z, haven't I got personal tax to pay after all that money that you've just whacked through the company? Potentially. Well, let's look at it. Tax rate. I used the red pen. I'm putting the tax rate in this. We're going to do a personal tax plan for £114,696.82. I'm going to do it in a way where we can use the information that we've already got. So what is the tax rate on the 12,570? In this case, for both, because they've got the same financial situation, so I'll save time, it's 0%. So the tax paid, which I'm going to do over here, is for both 0. Don't you love that? Good start. The next one, the home office agreement. What we've actually got in to offset the home office is a number of costs that you can do. We have templates to do this, is to offset the actual costs of having a home office for both John and Jane actually work out to £2,500 each, because you can do a whole host of things in your home office, provided it is available to all the people. And since it's a husband and wife company, a lot of these things can be claimable. We worked out in this case, because it's got 2,500 expense, the tax rate is 0. Don't you love it? Director contributions to pensions, provided you meet certain criteria, and this is the only contribution you made, always get advice, the tax rate will be 0 because it's not personal income, it's gone into your pension. 0, but you saved the corporation tax. Next bit, loan interest. Depending how you structure your personal income, and hopefully it's not going over people's heads, you can actually get, and there's a reason why, up to 6,000 each if you're a basic rate taxpayer, which these guys will be and ladies will be, and it's 0%. We're going to have a lot of fun over this. Mileage, £4,500 worth of mileage, provided you've got the right documentation and the supporting evidence, that is also 0% because it's an expense. It offsets. You don't have no issues provided you've done that. Mobile phone costs, that's an expense. 0%. Zero. We're doing quite well here. Right, this one is a bit more complicated. LLP rent for office, if you can read my writing. Right, 30,000 each. That's about 5,000 each. In this case, when we did this planning, how we bought the office, we had some advanced knowledge and we knew that we got expenses such as capital allowances and etc. on the commercial property, which in fact in this case can't bring the 60,000 down to, because there's a tax deductible, 0. We're almost there. The next bit is obviously trivial benefits. Trivial benefits are an expense that you're claiming because you actually incurred the cost. 0. Right. Now you're going to probably like, Z, I'm sure you said there was some personal tax to pay. Potentially. And we're going to put that here because I wanted a certain amount of income. And what we basically were going to do is utilize dividends. And if you look before, we did have some profit left to do dividends. Believe it or not, after corporation tax, the profit for dividends, if I get this right, this is 0.10, right here, dividends was £6,933.60 each. This has actually got tax rate. You get a £500 allowance now only, unfortunately. So the rest of it, less the £500, is at 8.75%, which actually gives us, if I do the equals over here, pretty much the only tax you're going to pay. £562.94 each, total £1,125.68. And because the individual tax, that's actually your total tax, personal tax, total personal tax, both you and the missus, £562 each. They are. So total personal tax bill, £562.94 times 2, which gives you £1,125.88. Get my number right over here. Got a few pennies. I'm sure someone will point that out. How much was that previously? £114,696.82. Now down to £1,125.88. And because it's below £1,000 each. What have we actually done here? What's the outcome of all of this? Right, apart from obviously the amazing tax saving, which I've now proved how to get 4.4k. If you watch the video, you'll see how we got to that number. This personal tax still gives you, if you add all this income out, you are still earning about gross income about £58,000. So you're still clearing over £100,000 of income, but you're doing it tax efficiently because you're claiming all the different reliefs and allowances available based on this scenario. So it's the difference here. So I've earned over 100,000 income. I've reduced my tax bill considerably, as we can see. Got rid of payment on account. What else have we done? Two other major things that people don't realize. By diversifying our income, we've now got a pension pot of 120,000. We've also got a commercial property, which is generating money. So we've got 3 different pots of income. Our business, our property business, so trading business, property business, and the pension. That is huge if you think about, and this is the advice a good accountant tax advisor should be working with you, and provided you've got that mindset, it is achievable. So we're going to finish off here on this last bit because I have to. It's bugging me. What's this number now? Right? We got 71% to 2%, right? Okay. What was the breakdown of the 777? I know we whacked it. I sort of remember it was 62,500 corporation tax, and personal tax, including the dreaded payment on account, was 114,696.62, and we rounded it up to nicely 170, rounded up to about 177. These were the numbers that made that number up. Post tax planning, We've got corporation tax, got it down to £3,252.80 corporation tax, and personal tax in total for both John and Jane, £1,125.88. Hence, we got to the 4.4K. That scenario, as I was mentioning before, and I want to emphasize this point, it's not just the tax saving, which is obviously quite big, because you can see how we've done it now. It is also, what else have we've got? And I'm going to draw on this. My team may not be happy. You've got a property company. Then you've got a pension. And that is actually a SAS pension, to be exact, which is a very specific type of pension. And what you're actually doing is, you're doing our blueprint. What we do for a lot of clients is actually show them how to diversify their risk and have different pots of money. So you've got a trading business, you've got a property business, and you've got a pension. I've just shown you how we've done all of that and saved you a hell of a lot of tax, I hope. And you still got over 100 grand, so you're not a pauper. And that's what happens to a lot of entrepreneurs. They decide to save personal tax without no money. You still get the money legitimately tax-free. I hope that was of value, and please do like, comment and subscribe to us if you like this. And when you do comment, if there's any other stuff you want to know, let us know. But before I finish, please do, in order to make that happen, get the right people behind you to work with you, because if you don't, you're not going to get there, and also you may not do it correctly. So important. So hope you enjoyed that value. Thank you so much for watching.